Brian Manning here with the weekly update. Super excited to get back at doing these. I know we sent out a handful of emails in December that were text only. We got a lot of messages wondering if we're going to come back and do video. We are. We're here. We're live. We're excited. 2025, here we go. But really, before I get started, and really before I get too much excitement out there, I do want to say that just our hearts go out to everybody that's being impacted right now by these fires in California. It's just devastating to see this. Unfortunately, we've gone through this ourselves here with Louisville, Erie, Superior, the impacts we've had of fire. We just know the devastation all too well, and it's just heartbreaking to see families that are just being distressed by this, and our hearts go out to everyone, and we hope that there's brighter days ahead of you. I will say this definitely makes me think about one thing, and then what that is pay attention to your home insurance. I talked to a lot of borrowers. They're only focused on what's their annual premium, but I can tell you your annual insurance premiums don't matter if you unfortunately lose your house in total devastation. So please pay attention to your homeowners insurance and your premiums, but most importantly, our hearts go out to everybody in California. Let's get started. So Monday of this week, we had a changeover in the Federal Reserve. What do I mean by that? So Federal Reserve has Fed voting members. Not all Federal Reserve members vote, and every year we have 4 leave and 4 new ones come in. So we got rid of 4, and the 4 that we got rid of were all what's called hawks. So they were all voting Fed members that were in favor of hiking interest rates. Okay, then we replaced them with 4 new ones. Of the 4 we replaced them with, 1 is a dove, so that means 1 is in favor of Fed rates moving lower, and 3 of them, it'd help if I could do my math with my fingers, 3 of them are hawks as well. So we got rid of 4 hawks, so we got 3. It is what it is, so we'll have to wait and see what happens there. Tuesday this week, we got some feedback from CoreLogic. So CoreLogic is one of the best places to look for feedback and predictions on home appreciation. In 2025, their prediction originally was going to be 2.4% home appreciation across the country. Well, they upped that, which is exciting to see, and now they're at 3.8%. So it's really good to see CoreLogic upping their anticipation of home appreciation across the country. Wednesday this week, we got ADP. So ADP is the largest provider of private payrolls in the U.S. There was an expectation of 140,000 jobs to be created in the month of December. Instead, we got 122,000 jobs created. So definitely the report was softer than expected. We have another report coming out tomorrow. That's the BLS report. That stands for the Bureau of Labor Statistics. The first Friday of every month, we get this report from the government. This is going to be very important for us to watch out for. Anticipation of tomorrow's report, and something to make very close note of, is 160,000 jobs created in the month of December, and unemployment to remain at 4.2%. So in tomorrow's report, if it's a strong report, if unemployment moves lower than 4.2% or jobs are higher than 160,000, unfortunately, that's likely not going to go great for mortgage rates. But if it's a report that's not as good, maybe unemployment moves up, maybe the jobs report and the jobs reported for the month of December are not as good as expected. That could go well for mortgage rates. So very important. Keep an eye on that, and we'll talk more about that next week. Also, Wednesday this week, we got the Fed minutes. So the Federal Reserve had a 2-day meeting. It was December 17th and 18th. They concluded it. Then we get the minutes. So this is the notes from their meeting. So we really look at this to figure out what is the mindset of the Federal Reserve right now. So the biggest thing that our takeaway is that there's a lot of uncertainty in the Federal Reserve right now, primarily revolving around the Trump administration. And you can tell that they just kind of want to pause and wait and see what happens, because they are concerned about the unknown of what are going to be the impacts of their immigration policy and their tariff policy, because both of those could have an impact on inflation. We all know, because we've talked about this so many times in the past, that the Federal Reserve has 2 mandates. One is price stability in the United States, that's controlling inflation. Number 2 is gainful employment. So if you have tariffs, that could be potentially inflationary. If you have immigration adjustments, that could be inflationary as well. So the Federal Reserve, their tone in this meeting was a lot of uncertainty, a lot of feeling of, say, let's pause, let's wait, and let's see what happens. So I would not expect the Federal Reserve to do anything in January as far as rate cuts are concerned. We're going to have to wait and see what happens. It feels like they want to get farther into the year to see what's going on there. Today, relatively quiet news day, not a lot to talk about there. Markets are closed early. Actually, stock markets are closed today. Bond markets closed early today in observance of Jimmy Carter. One thing I would say, Jimmy Carter was huge on Habitat for Humanity. If you ever look at what he's done over the years, Jimmy Carter was phenomenal, and I definitely agree with markets closing today for him. I'm around. If you have any questions, let me know. realtors, we are super excited. We have a new presentation coming out. It's called Winning the Listing Presentation. Brand new content. First one is next week, Thursday, the 16th at Black Belly. I have classes coming up in Boulder, Colorado Springs, Denver, Fort Collins. I'm just stoked to get this content out there. It's going to be amazing. We're going to have a great time. Make sure you RSVP. There's limited space at all of these venues. We would love to see you there. Hope you have a great day. Talk with you soon.